friends, the quarterly results season brings lots of surprises as well as misses vis-a-vis market expectations around the result numbers. Not only do the surprises and misses have an impact on the stock prices, but they could also change the earnings estimates of future earnings. No wonder professional investors analyze important quarterly results minutely to understand business developments and companies' earnings prospects. In this video, we present an update and our view on three bellwether stocks: Reliance Industries, Infosys, and ICICI Bank. The result of Reliance Industries needs to be seen both from a consolidated perspective and also by gauging the performance of its three main businesses: oil to chemical, O2C, Reliance Jio, and which is also called as RGO, and retail. On a consolidated basis, Reliance Industries declared strong results with revenue growth of 56.7% year-on-year to Rs 2,193 billion and EBITDA growth of 62.6% to Rs 379.97 billion. EBITDA margin improved to 17.3% year-on-year from 16.7%. Profit after tax increased by 46.3% year-on-year to Rs 179.5 billion. Good going indeed on a consolidated basis. The O2C business, which currently contributes 74% to its total revenue, witnessed a fantastic quarter with revenue growth of 57% year-on-year to Rs 1,617 billion on account of higher crude oil and product prices. EBITDA surged by 63% year-on-year given high refining margins and high margin in petrochemical business. RGO's revenue increased by 4.7% Q-on-Q and its EBITDA margin went up by 50.1% to 109.6 billion. Steady improvements in customer engagement and subscriber mix and upgrades to higher data allowance have enabled the ARPU to grow by 4.8% Q-on-Q. Total subscriber base increased to 419.9 million in Q1 FY23 from 410 million in Q4 FY22. The future of RGO would now depend on the amount of spectrum that would be purchased in the upcoming auction. Its fiber to home business is shaping up well, with most subscribers opting for post-paid packages. Reliance Retail's revenue grew by 52% year-on-year to Rs 59 billion on back of growth in fashion and lifestyle business and consumer electronics segments. EBITDA doubled year-on-year owing to increasing operating leverage across key segments. The company added 792 new stores in Q1 FY23, taking the tally to 15,866 stores. Having said that, we expect Reliance Industries to face headwinds due to falling gross refining margins and the exports duty levy on high-speed diesel and air turbine fuel exports. On the other hand, there is a possibility that Reliance could unlock value for shareholders through digital and Reliance Retail IPOs. Potential monetization of gasification units will also be a positive. Reliance Industries' new energy business will bring the next leg of growth. At the current market price of Rs 2,411, the stock trades at 26.8 times FY23 estimated EPS and 22.3 times FY24 estimated EPS. On the valuation band, the stock trades near average valuation. Fundamentally, we have a positive view on the stock. Technically, the stock can be entered at the price range of Rs 2,250 to 2,200 or after a breakout above Rs 2,620. The next company whose results we will discuss is Infosys. Infosys delivered results slightly lower than street estimates. Revenue grew by 5.5% in constant currency terms sequentially. In US dollar terms, revenue grew by 3.8% Q-on-Q to $4,444 million. During Q1 FY23, energy and utilities and manufacturing verticals showed the highest growth, followed by communication, retail, and high tech. Its EBITDA margin contracted by 149 basis points on a Q-on-Q basis to 20.1% on the back of higher subcontractor expenses, lower utilization, and wage revisions. Reversal of client contractual provision and currency tailwinds helped to partially offset margin contraction. Net profit came at Rs 5,362 crores, down 5.7% on a quarter-on-quarter basis. Infosys has increased its guidance for revenue growth to 14 to 16% in constant currency terms for FY23 versus 13 to 15% earlier, led by a healthy deal pipeline and higher spending on growth and cost efficiencies. The company's management mentioned that the overall demand outlook is robust, even though there is weakness in some pockets such as mortgage subsegment and some delay in deal decision-making process on the deals. The company has been gaining market share with strong Cobalt cloud capabilities and a differentiated digital value proposition. At the current market price of Rs 1,461, the stock trades at 24.4 times FY23 estimated EPS and 20.8 times FY24 estimated EPS. On the valuation band, the stock trades at the average valuation. We have a positive fundamental view on the stock. Technically, the stock can be bought at Rs 1,300 to Rs 1,400 range. The third company we would be discussing is ICICI Bank. ICICI Bank reported solid growth in Q1 FY23 with standalone net interest income growing by 21% year-on-year and 5% quarter-on-quarter. Its net interest margin improved by 1 basis points Q-on-Q to 4.01%. Pre-provisioning operating profit grew by 16% year-on-year, whereas it was flat on quarter-on-quarter basis. Net profit grew by 50% year-on-year. ICICI Home Finance profit after tax grew by 135% year-on-year. ICICI Lombard General Insurance profit after tax grew by 80% year-on-year. ICICI Bank's Canada subsidiary profit after tax grew by 44% in Canadian dollar terms. Overall, loan growth was at 21% year-on-year and 4% quarter-on-quarter. Gross slippages went up by 2% to 2.8% quarter-on-quarter. However, net slippages was negative due to higher recoveries. Gross non-performing loans declined 2% quarter-on-quarter. Deposits grew by 13% year-on-year. Average current accounts and savings accounts grew by 23% year-on-year and 19% year-on-year respectively. ICICI Bank has shown consistent growth, high and stable margins, improving asset quality, and high return on equity. Further, the company has a strong liability franchise and has a strong focus on digital platform offerings. At the current market price of 801 rupees, the stock trades at 3.3 times FY23 adjusted book value and 2.9 times FY24 adjusted book value. On the valuation band, the stock trades between +1 standard deviation and average valuation. Fundamentally, we have a positive view on the stock. Technically, ICICI Bank's stock can be bought in two tranches at Rs 770 and 740 levels. And that's all, folks. This is Veer Shah signing off. Happy investing. This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.